You went from 7-figure sales in the tech world to doing 8 to 9-figure sales by selling the actual companies. So what does that mean? How would you break that down at a high level to the audience?
Absolutely. So right out of school, I was a software developer, got into sales, was a director level sales manager. My team had a 20 million quota. Individually, I was focused on 7-figure major accounts. I had a great mentor at the time, a famous CEO in Silicon Valley named Tony Zingale, who'd had a lot of great exits. I asked him what I should do to take myself to the next level and be a CEO myself. He said, you should do every job in the software business. So sales, product marketing, product management, creating the product. I skipped HR, but he said, you got to figure out finance. I said, how do I do that, Tony? He said, you should go to investment banking, which is kind of like, I don't know, just mission impossible usually. So I went back to business school.
Yeah.
I intended to spend a couple of years there, ended up liking it, made the transition from selling enterprise software packages for $1 million to selling enterprise software companies for 8 or 9 figures.
Wow. And so did you ever make it to CEO? Is that still a goal?
I did. I acquired my way into the CEO job. So I acquired a software business in Germany that had 120 people and did about 500 million a year in gross revenue, about 30 million in net revenue. And I was CEO for a couple of years.
I love that because I was listening to a sales trainer the other day. I had a CRO on the podcast, actually. I said, what advice would you give younger sellers? And his point was, you have a skill set as sales, right? So right now you're only using it for the company. You know how to get into DMs, you know how to get phone calls, frame cases. Why wouldn't you use that for your own personal ambitions, like going and getting other jobs, et cetera? So you just said you took your investment banking skill set and made yourself CEO, essentially. Is that how you? That's perfect. That's wonderful. What are you focusing on now? Because a lot of the listeners here have rose the ranks from on the sales side and CFO side, from director of sales to VP to CRO, and then several of them now that I have a lot of respect for are at the helm of their own company, usually SaaS companies around 40 million to 100 million. And I think that on a lot of their minds is what's next? Like, what's the exit look like? And I know for employees, they don't like that question, but I've personally been through a company that was acquired, then a company that IPO'd, and then I've also been through the painful experience of like a PE portfolio company that was 7 years into its cycle and wasn't getting picked up. So what do you do now, or how do you position yourself to these leaders, and what are you trying to help them do or their companies do?
Yeah, absolutely. That's a great question, Chad. So my business, Comcap Holdings LLC, I'm the CEO of a 30-person investment banking group. We primarily do sell-side mergers and acquisitions. We also do buy-side, meaning we help companies acquire other businesses, and we do financings. Generally, we're working with SaaS or software or AI companies, as well as tech-enabled services and professional services companies. And usually my client is the CEO or the board, and then I'm working actively with the CRO and the CFO. And so getting back to a couple of your questions, I think one of the key things that somebody at any level needs to think about these days, number one is, what's in it for me? Oftentimes, as you alluded to, these companies are owned by private equity firms. They are brutally efficient, with an emphasis on both words, but at least equal emphasis on the brutally. And so if you're not thinking about what's in it for you and what your next step is, you're doing it wrong. Specifically, what does that mean? If you're a CRO, you've got great relationships, and that is your most tangible asset. You should be laser focused on continuing to build those relationships and even extend them beyond your current position. So as you're thinking about like what's next for me, think about what other adjacent roles you might be cut out for, and then spend some of the time at your current position networking into those next step relationships. They may not even be directly relevant for what you're doing today, but let's say you're working at a SaaS company that's blue, and SaaS companies that are orange are the hot thing. Start to direct your energy into that new set of either buyer decision maker relationships, partner relationships, if you're partnering with the likes of Google, Accenture, what have you. But really, you should be devoting at least 10 or 15% of your time and energy to that next step in your career. And oftentimes when you get to the CXO level, it's about relationships. That can include relationships with private equity firms, venture capital firms, and what have you. This could be as easy as sitting with Claude or ChatGPT and a glass of
Yeah,
wine,
yeah.
reading out, these are my goals for my next step. Who would be the
Yeah.
top 5 relationships that I could nurture in the next 6 months to help affect
Well,
that?
can we spend some time on that? I want to unpack that some because I have maybe my blind spots are traditional corporate mindset of you made director, now you're going to go do senior director, now you're going to be VP. In fact, I remember when I first made director, the CRO back then sat me down and was like, you know, Chad, the path to VP is really simple. It takes about 5 years, and really just kind of want to see that you stuck around. And I was like, oh, that sounds absolutely depressing, you know. And I never stuck around for that 5 years. So I think my point in that is, there are many intangibles to merger and acquisition that a lot of these leaders might be thinking about or might not. You know, I'm not inside
Yep.
their head. But what are some of them? I read, I forget the author's name of PE Playbook, but he was the only guy that mentioned that.
Great
He
book.
used a
Yep.
word that, yeah, okay, great. It's I really had to digest it a couple times. And he was talking to the me's of the world, you know, like the directors, the VPs, or the C-suite, and he was saying, "Hey, you got to go into portcos. These portfolio companies need you. You're stepping out of enterprise. You're going into mid-market." But anyway, he used the word generational wealth by just going through a couple different cycles because there were options that I didn't know about. Essentially, like the earn backs and the buyouts and how to roll back into that. So if you're trying to pitch this to someone who's traditionally corporate mindset, how do you start laying that out for him or her? Like, what are the cherries or the icing on the cake that you say, listen, maybe you haven't thought about this on an exit for your company? What's that look like for them?
Yeah, that's an amazing question, Chad. So I think one leading into the direct answer to the question, the one thing I would do is if you're at the director, senior director, VP level, CRO level, even CEO level, number one is peer mentoring. Try to find, there's the old saying that you're the average of your 5 best friends. Find 4 or 5 people that are similar level as you, or maybe one level ahead, and be asking some of these same questions to them. They'll be a great resource for you. But specifically to the point about generational wealth, to participate in some of the value creation. Oftentimes, if you're in a business and you're not the CEO, it's going to be sold. They need the go forward team, obviously, to stick around. And that's a very important moment to be very aggressive with the buyer of that business. Obviously, you've got to assert your value to that go forward business. And usually this means having a plan about how you're going to blow out whatever your numbers are as part of that acquired business, and then very aggressively presenting that to the acquirer, the private equity firm, or both. If you're, let's say, a CRO and you're working for the CEO, sometimes this can be a little bit of an uncomfortable dynamic because the CEO is still going to probably be your boss in that new scenario. But if you're one level down, at that point, you want to have visibility either at the board level or at the senior management level of whoever the acquirer is or the PE firm is. And so to some extent, you've got to negotiate with your current boss to give you that visibility and that headroom. Because I can tell you at least 50% of the time when a company's acquired, the CEO may leave in a year or two. And
Yeah.
oftentimes they're going to go off and do the next thing. And that's great. And that was their deal. But if you're, let's
Yeah.
say, VP of sales, and then you're looking for the CRO promote, or maybe even to be general manager of that business if the CEO leaves, you need to start kind of broadening your aperture about some of the political issues you're dealing with and your visibility in that new acquirer.
Okay, so you just hinted to something I want to come back to on the political side, but really, and sorry to sound maybe 7 levels below you and too tactical, but what is in it for them? Give them a taste of the money side too, because my role will go for around 150 to 220,000 a year. That's just typical director of revenue operations, anywhere from mid-market to enterprise. So one scenario is, hey, new PE company owner bought you guys. Congratulations. We're going to give you a 6-month buyback and maybe some 25% bonus. And that's quick math. And it's actually, if you're used to that mid 6-figure income, it's not really impressive math. You know, it's like, all right, I don't know who you guys are. This could be horrible. You might want me to work 4 times as much. And now you're going to dangle like a higher tax bill at me and another 60,000, right? So but there is more to that, right? More than just a traditional bonus. What are those opportunities to say, if you do 6 months to a year with us, you actually get a minor investment position in this, or et cetera? Like, what's kind of like the ticket for some of these guys to stick around?
Yeah, well, oftentimes, depending on the size of the business, there'd be a new options pool set up, and that might be a total of between 10 and 20% of whatever the nominal value of the company is. So let's say you're with a company that gets acquired for 100 million. They probably would have fresh grants for between 10 and 20 million. Oftentimes, the CEO and the CFO are going to soak up a lot of that. But these days, either with Google search or by asking AI, you can get a pretty quick read on what market is for whatever your title and position is. And if it's a case where some people are leaving as part of the deal, either they were vested or frankly, they're being terminated for being redundant, then that means that you're one of the go-forward team members. That means you should be increasing the size of your stake. And literally, there's kind of usually a 1 to 3 month window where all this stuff gets decided. And so being top of your game, playing the political game, hitting your numbers in this window can be crucial. And oftentimes, if you don't get something that's exciting, then it may be time to leave. And you need to kind of assess the external opportunities. And usually your best bet is to push hard internally, but then also do that networking externally to see what your market value is to bring in a competitive bid. So you can tell whoever the buyer is, that's great. I'm fully bought in with your strategy. I love this, but I got to admit, this is what I'm seeing in the market. I wasn't looking. I got a call. They offered me this. For me and my family, I just need you to do 20% better than that.
So, but that's salary. So is there a world where
that's equity also? That's 100% equity
okay.
also. But having that external offer, and ideally it's a similar company. If you're working at a big company that gets acquired by another big company, you may find a startup that's going to give you 2% of the equity. The big company's not going to give you 2% of the equity, but the absolute dollar value of what they're giving you should be bigger.
Right. So back of the napkin math for those of us that just want to hear it straight out. You might have 150,000 a year or 200,000 a year employee, or maybe even 300 if they're at VP level. They could be looking at an additional $1 million, $2 million, $10 million. Obviously, it's dependent on the value of the company, but what is that by way of comparison to just a traditional, here's a little raise and here's a bonus option?
Yeah, it depends on the size of the business. The bigger the business you're at, if you're director level, you may be looking at, let's say, $1 million to $1.5 million over 4 years.
All right, you just motivated a lot of people, though. I know that maybe at your level, it's like we're not worried about these little $1 million offers, but I've been through those 3 exits. I remember when Webroot was a cybersecurity firm, they were about 40 million. We had all these stock options. I think I'm well past any sort of blackout period, so we'll just say it. It was worth like $6,000 to me. I was like, this wasn't even worth the trouble of figuring out the taxes.
I had a very good friend. Not to interject. I had a very good friend. Funny story. He was like, my company got bought. I sold my options. It was enough to buy a nice belt.
Yeah. It's like it wasn't even worth the taxes, so I took it. Now, so Rubrik, on the other hand, did IPO 2 or 3 years ago. So I'll be more careful about how I present this, and then everyone should understand that their own insider trading laws apply to you. But the SEC, they have to file those public filings with the SEC. And I looked at the value of the shares and the numbers that like the C-suite got. And it was a tremendous cash out for them. But then also when my stock shares came back, that was a down payment on a house for me. So I was like, oh, okay, there is actually something to this. There's something to this game. It made me pay a lot more attention to stock shares. And now as I've been consulting with some of these SaaS companies that are too recently for me to say names for insider trading reasons, they're all sitting on a ton of stock options that I think are tremendous value. But my point is, I think for the people playing the corporate game, there's a bigger landscape out there. And that's kind of where your world starts lacing on top of this. So before we get too far in one direction or another, what is your preference or your flavor? Is it mainly private equity, putting in early VC, or just doing merger and acquisition? Are you also in the IP world with your bank? Like, how do you go to market with your services?
Yeah, thanks for that question, Chad. So generally, the types of companies I'm working with would be a SaaS or an AI company with 10 million or more in ARR or annualized revenue, or any other type of company with 3 to 5 million or more in profit. And so we're usually doing sell side M&A, helping those businesses to sell, helping them raise capital, usually from growth equity or private equity firms, might be 25 to $100 million. And then very occasionally, we're helping public companies with a variety of different transactions, either equity raises, debt raises, or M&A themselves. And so I think for your listeners, if you take maybe one and a half things out of this session, I'd say, number one, figure out a way to get a CXO title, because that's really going to be the big unlock in terms of your option grants. And then number two, really be thoughtful about your networking plan. I mentioned that peer network group, the other people who are going to be influencers and a channel to that next job, whether that's Accenture, Google, some big technology partner, or potentially venture capital or other investors that may be in your ecosystem. But I think really where the payouts start happening in sales at any level, you can make great cash comp. But in terms of getting the equity comp, you've either got to be an early sales leader at a company that really takes off, or you've got to have a C in front of your title of some sort.
Yeah. And just to clarify, that's what you meant by CXO, right? You just mean any of the C-suite?
Yeah.
Yeah, I had that company that had the failed IPO, they had a CXO there, a Chief Excellence Officer. I'm like,
okay.
you guys are making up titles now. He was a friend of the CEO. Why did you either pick or settle into the band that you're in now? Why is this a sweet spot for you? That 10 million to I think I heard you say 10 to 20, and then you try to get them 25 plus.
Yeah, that's right. Well, I used to work at Credit Suisse and some other very large global investment banks, and I started my own firm in 2012. And so basically our value proposition is we give the same services, but we deal with smaller companies, oftentimes boards, particularly like certain brand names for a bigger business. And so we're basically competing for smaller customers without the benefit of that brand name, but then without paying, effectively kind of the fees or the rake that I would have to give to a Credit Suisse or another equivalent type firm.
I have heard Aron talk a lot about this. Do you know his name as an author? He does capital raises, a lot of VC. He wrote the best-selling book, Pitch Anything and Flip the Script.
Oh, yeah.
Anyway.
Yep.
Okay. Very interesting personality if you watch any of his, mainly because he was so good with the frame game, but he had to use it raising capital. One thing that struck me, which I was hoping you could unpack some more, is he had a similar problem set where he wasn't the big name, right? So I even remember in one of these IPOs, what was Jim Cramer's bank? Anyway, one of the big name banks is on it. They're trying to do the brokering, and I get this impression that if you're not one of the top 5 logos in banking in New York City, like when you're going out to raise capital or represent some of these, you have more challenges or adversity to get the same result. So let me pause on that and see, does that make sense? Am I kind of scratching at the right thing here?
Yeah, that's right. I mean, if you imagine like a Goldman Sachs or Morgan Stanley or some other
Goldman
bank
Sachs,
that has
thank you. I was thinking of Jim Cramer, prior Goldman Sachs.
Yep. That has a 100-year pedigree, of course they've got great brand name
That's right.
recognition, and so anybody else
Right.
is kind of fighting upstream to create a similar or
So
at
choice
least
deals are just
monetizable.
dropping in their lap because they have brand, but you're coming in and you're saying, listen, 10 million valuation SaaS company right now, we can still go out and get you that 25 to 40, but it's going to take a little bit more. So what does that process look like for you then when you're not walking in with the Goldman Sachs name?
Yeah, that's a really insightful question. I've never had anybody ask me that before. I think this is really applicable to anybody in sales. So, oftentimes, just to reframe it a bit, I might be working with a company with 10 to 20 million in revenue, or once again, maybe 5 to 15 or 20 million of profit. And I think just like any kind of sales, if you're selling for SAP, a lot of CFOs are going to take your call. If you're selling for an upstart competitor to SAP or an AI company people have not heard about, you need to be incrementally more thoughtful and more persuasive. And so specifically that means diagnosing what that customer likely needs based on the other customers you've dealt with, leading with that, and then leading with, this is what I've done for somebody exactly like you. And I have a 90+% chance of getting you a similar outcome. And that's a message that's going to work in any kind of selling, whether it's investment banking services or being a software professional services company.
That's so awesome.
And we were able to take a little bit.
Ahead.
Sorry, we were able to take it a little bit farther because some of the bigger companies, they're very slow moving, and in terms of both their ability to message things in the market and the ability to get things done, especially with the advent of AI, we can literally be 5 times as fast as one of those bigger entities because they spend about half of their time working on internal matters. We don't have that overhead. We use groundbreaking tools. And we literally, one of our staff members can be 3 times, 4 times as productive as a staff member at a larger bank. So that's a big unlock also.
I want to give you some company profiles and then sort of walk start to finish on what maybe qualifying them and then going into some sort of exit would look like. I know that I kind of asked you for a brief what do you do, but what is your, just for the audience, if they haven't caught up at this point, what is your kind of official introduction? What do you like to tell people about who you like to serve, who you are, what you stand for, and then how you take these guys to market before we kind of give some end-to-end scenarios on that?
Yeah, great. So generally we'd say we work with lower middle market companies, generally that might be valued at 30 million to 200 million. We obviously sell to businesses or help raise money. We do this for companies in the areas we care about around the world. Last year, I sold a business in Norway that was partially controlled by the Norwegian oil fund. Sold a business.
The Nordics are very cool, though. Yeah,
it was a great time. We had a great closing party.
Yeah.
So the types of companies I work with, the band I work with, I'm competitive and differentiated on a global basis because I do have a somewhat narrow focus. And we take them to market, and our part of our brand promise to our customers is we're going to find the highest payer on a global basis. We're going to tell your story like nobody else can because we know how these verticalized hyper-growth companies work. And we're going to get you the best deal, applying the best negotiation techniques that were learned at the biggest banks around the world.
That's so good. I'm going to give you a profile here, and hearing that, though, you might actually, maybe this could be the first example of where you're like disqualified. So I work in the tech industry. Most of my colleagues now, they've gone on to start these companies in the managed service provider space. But what they build is software that supports these businesses that do computer IT support for small businesses. So do you know the MSP space?
I love it, yes.
Great, there we go. Kaseya Connect was just happening in Las Vegas last week. Kaseya is a $1 billion valuation, I think, by most metrics. My point in that is that these MSPs themselves are little $1 million to $10 million businesses, but it's in a $1 billion space. And also, you and I are going to talk about AI. I want to bring that up. But in the age of AI, I see that fracturing more in a good way. I just think that you're going to have more options for service providers, for technical solutions providers. They'll be able to make you very customized solution. They'll be very agile and nimble, but they'll be little $1 million to $10 million businesses. Now, on top of that, the people selling the tools to the gold miners are these SaaS providers that are trying to sell in these remote management platforms, RMMs, these billing applications to make your clock ticking better. So some of the peers I know now, they own these SaaS companies that service the MSPs, even though they're still in the MSP space. They're probably worth $10 to $40 million at this point. I'm guessing, I could ask directly, but I'm guessing they have an exit in mind. They're all about 5 years into some of these cycles. So what do you think when you think, okay, SaaS provider, $10 to $40 million, how would you, if that's in your buckets that you like to serve, how would you start sussing out this company? What are you looking for? What matters? And then what's on the other side of the rainbow for them? What would you be trying to encourage them to do or entice them with to consider taking exits or let someone buy them?
Another great question. So the three initial questions I would have would be, what's your revenue growth rate? What's your
Great.
percentage profitability? And it doesn't always need to be amazing, but it shouldn't be massively negative. And then what's your churn rate? And
Okay.
those are obviously very simple questions. If somebody's got a very low churn rate, if it's 5% a year, it means their product works. People like the
Right.
service. You've got a base to
Right.
grow on. If you're growing at 25% or more a year, you're probably a leader in your category, which is great. And if you're, let's say, at least break even or a little bit break even, or not losing too much money because you're making some investments, that means the business is stable and a good bet. If you're growing much less than 25%, that may mean you've kind of run out of tools in the toolbox to juice growth. And that may be a good time to consider an exit, but you may be doing it at worse terms. Whereas if
I
you're
was just
growing
going to
at,
ask you that. Is there, sorry to cut you off, but is there
yeah,
like a, like in the shoots and ladders game, is there a little slide here where you're like, look, this was a really good stab for 5 years, but you know what? 2% growth year over year, and you guys are barely cash flowing. Let me introduce you to so and so who will buy you for like a 1.5 multiple and just take the check and move to Acapulco. Like, is there a plan B for some of these people?
there's absolutely an ecosystem like that. And I would say for like, let's say companies valued at between 5 and 20 million, there are very they're not necessarily small, but there's a certain kind of category of private equity firm that focuses on diligencing and buying those businesses. And once again, 1.5 times revenue multiple, that's the strike zone they're looking at. Whereas if you're growing at 30% plus, you have 10% profit margins or better, you could be looking at at a 6 to double digit revenue multiple, kind of depending on the
Okay.
particulars of the business.
Okay, so that was your concession. Now the other ones that are hitting kind of the other two buckets I hear from you. What do you start talking to them about next? Saying, "Hey, congratulations! What you've done is really impressive, astronomical. Here's what this might look like 6 months to a year from now." Like, what are you selling them, or what are you encouraging them to do to take the next step?
Well, yeah. So usually, what we're doing with the client that says, I'm interested in selling my business, we'll bring in specialty lawyers and accountants. We'll do a diagnosis to make sure there's not a history of lawsuits or anything that's going to stop them from being successful in a sale process. We create all the marketing materials. We know all the strategic buyers as well as the private equity firms that care about that space. And then we put together, in some cases, a soft process, in some cases, a very disciplined process. I have clients where we spend a year building relationships where our client CEO, they'll visit a trade show, we'll book 5 meetings over coffee, drinks, dinner. We'll repeat that for 6 or 9 months. And then finally coming out of one of those meetings, somebody says, wow, I'd really like to have an acquisition discussion. And then once that happens, then we trigger a very disciplined process. And just like any
Interesting.
salesperson would, we'll say, this is how we're going to run things. We've got a 90-day or 120-day window. We're going to have some information exchange on both sides. We're going to expect to receive bids. There's going to be negotiation, diligence, and then we'll close that deal within that 4 to 6 month window. And at that point, our client usually they're given some offer to stick around and make it interesting for them for another 1 to 3 years. And then the rest of their team has certain incentives to do the same.
Can you tell me more about the marketing? I think you meant one thing, but I've had this experience now with 3 exit scenarios where I almost don't like it. I almost hate now when I get hired on, I'm jazzed. I've met the CEO or the CRO and I'm like, let's go. And then all of a sudden 6 months later, I start to see some new marketing pop up. They're going through a rebrand. They're putting a new logo there. And I'm like, shoot, they're planning an exit because everything starts to suck for people. I guess for people who are operationally minded like me, my number one objective every day is to solve your problems. The problem is during exit season, that priority shifts, and maybe you could say, Chad, you're not high level enough to understand why this is happening, but it shifts from like, let's make real problem solutions to let's put a new paint of coat on the house and just get this thing ready to sell. So what do you mean by marketing? Do you mean like marketing material to sell, to advertise the deal to prospective buyers? Or are you also telling them like, let's get a new color scheme here. Let's maybe try to spicing up that logo some.
Well, it's definitely the former, and it's often the latter. One of the things we do is as I mentioned, I deal with sellers and buyers on a global basis. And so in many cases, I may say, these are 5 businesses that sold in the last 18 months. These were the key things about those businesses. There were kind of 2 or 3 things that really stood out to buyers. Dear client, I see you've got some green shoots in this area. You should really kind of pour the gas on growing that end of the business. And that, these days, of course, that's AI. In some cases, it could be if you're a product-led growth company, figuring out if you can be a sales-led growth company or not. And I know a lot of your constituency, your viewers are going to be more in the sales-led growth camp, but it's going to be making sure that there's a couple legs to the growth stool and that you've got some data around that. That may be hiring an outside marketing agency. It may mean paying fees.
See, you're making me uncomfortable already. This all sounds so familiar. I'm like, oh no, it's time to go put resumes out because these guys are about to sell. Keep going. What else is important?
It could be paying fees to the Gartner groups and the IDCs of the world, paying fees to SAP and Salesforce to participate in their partner programs. And each of these is kind of a long burn. So you may have to do it and then see what happens over 9 months. But I'm going to tell you a little bit of a side story, Chad. So I mentioned early on in my career, obviously I was in sales. I was a software engineer. So I started off at a 15-person company, grew to 50 people. We were acquired by a 200-person company. I didn't know anything about it. I was totally clueless. They had the CFO of the big 200-person acquiring company came by to meet all of us. I was, I forget, like 25 at the time. And I said, I'm going to be your most expensive employee. I hate your culture. I don't want to be here. That was my opening entree to the CFO. As a very young person. And that was before I got into sales. I was still a software engineer.
That probably didn't last long.
Well, it was funny. He was a very mature, great guy. And he kind of knew that it was a stressful time for everybody. And he kind of gave me the benefit of the doubt. And ultimately, they gave me a great options package. I got promoted 3 times in 4 years. And so the point of that is that it can be nerve-wracking to go through an acquisition, but usually the bigger company is going to bring bigger opportunities. And it really depends on where you are in your career. But if you're ready to get 3 promotions in 4 years, it could be great being in that bigger platform. In some cases, you may get a bigger title by going to a smaller company, and it may be a good time to exit. But for me in that case, it worked out great.
I almost wanted to be, if you know a guy, you can connect us. I wanted to be the unnamed operator, like a Michael Clayton, and get close to these PE companies because I took the Portco position because of the PE company. That their recruiter reached out to me, put me in front of one PE company in Texas, and then said, hey, they really encouraged me to talk to the other one in Louisiana. And I felt embedded in the Louisiana one. I didn't get enough time with the guys in New York, but I wanted to start getting closer to them and say, listen, if we could package this in like a 6-month to 1 year deal, just plug me in, let's do the transformation, get out of there. Then at least there's no surprises where 6 months later I'm like, oh, there's all the new little signs they're about to put on the wall right there. But yeah, I think when there's a lot of uncertainty at the lower levels, and by lower levels I mean even directors and senior directors. They don't know as much as people think that they know. And there's a lot that the C-suite can't tell that I've been privy to experience. So I get that, but I also think it's the natural evolution of business, and maybe you can speak to this about why it's necessary. An example I have is at the same Portco, 120 million. They were paying for 2 CRMs. You said you did customer relationship management tools before. All right, so I've made a lot of money supporting Salesforce over my career. God bless you, Salesforce. They're very complicated. They're very expensive. They also had their niche little chemical industry CRM. And when it finally dawned on me that they were paying $100K a year for this one, and we just renewed $200K for that one, I kept impressing upon the CFO, hey, you really got to, this doesn't make any sense. Finally, she walked into my office and she said, Chad, we're 7 years into a PE cycle. This is the next owner's problem. And I was like, oh. I was like, okay, I'm not here to fight every fight. I'm not here to solve every problem. I get it now. So we're going to keep Salesforce because it's going to increase their multiple. And the next owner will have to figure this out. But my question then is, what would you tell someone that feels that anxiety or that uncertainty? this sort of is business at large. Like, what is the cycle of it? What's the nature of it? What's the health of it? How do you look at the lens of businesses now?
Yeah, wow, that another great question, Chad. So, um, consolidation and fragmentation is kind of a natural trend in businesses of all type. So, consolidation means usually kind of businesses merge, get bigger and bigger, bigger, and then there may be some burst of innovation, and it could be related to something happening in software land or artificial intelligence. And then there's a lot of small companies that come up. Some of those may grow and challenge the big ones. Other ones will merge together and then ultimately kind of challenge the big ones. So the absolute truth is these days, knowing how to thrive in a merger scenario it's a survival skill, and
Yeah.
it's like I said, basically you should be going into each day thinking, especially if you're on the sales side, how am I going to beat my competition, both internally and externally? And internally, it's not through having sharp elbows. It's how do I outperform the next guy, and how am I smarter than the next guy, and how do I
Yeah.
represent that in the right way internally, so I'm getting either promotion opportunities or territory assignment opportunities that somebody else isn't getting. And sometimes that is a little bit of a zero-sum game, but that's how you got to show
It's
up every
zero
day.
sum, but I still think it's high collaboration. And what I've noticed, and we're going to talk about, let's lean into AI. But I was consulting for one of the billion-dollar AI companies out there just 4 months ago. It was breakneck. The rapid. I can count in my 4 months there 3 to 5 times where, hey, this is Jill from so and so company. And it's like we're onboarding her because we just swallowed up your company. What question was I getting at? Dang it. My thought on that is it is collaborative by nature, but in the speed of this, what I'm finding is a lot of people don't want the pressure of that successful tier. So I've found even when I try to set someone else up for success, they still won't take it and run with it. So I think I would just say, when you're sharp, when you're a high performer, you are standing out, you will get selected, but that doesn't mean that you have to stab the person next to you in the back. In fact, it's
100%.
almost more,
Yeah.
it's almost more harmful to them if you're like, hey, the CFO was waiting for this reply. Here's the data right here. She asked you first. Why don't you take a stab at it? It's like a lot of people bow down from that pressure. I think we'll see a little disparity in what happens in the workforce. That is what it is. But going into AI, what are you seeing it do to the marketplace? And then you mentioned earlier it's changing the way you even service the marketplace. So let's just go big on that one. Where are you at with AI?
Yeah, so I'm going to give a little bit of a longish or medium narrative here. So at my firm at ComCap, what we did is in 2025, the message was play around with ChatGPT, see how this helps you. People were using it to kind of draft great emails,
That's right.
do pretty basic, table stakes stuff. In February, Claude Opus 4.6 came out, and we basically
So
blew
good.
everything up. We
That's it.
literally had Claude rewrite all of our job descriptions, saying, Claude, what should a human do, and what should a machine do? We had
That's
everybody
good.
write down their standard operating procedures and then feed that back into Claude and say, how can we automate this?
Yeah.
And we basically changed every part of the business, and we introduced machines into the loop on almost every process that anybody would do. And we did it in a way that we would incorporate homegrown AI written software. So
Yeah.
we're getting off of HubSpot. We're getting away from Monday.com, which is our task management and project management solution. We're kind of getting away from a lot of packaged apps into a homegrown AI
Would you
platform.
buy a company? Would you buy a $40 million company that also did that though?
Well, so I guess the point of what I'm saying is each of us needs to be really focused on what we're uniquely good at, both as an
Yeah.
individual and as a company. And we should be using AI to aggressively attack whatever the status quo is. We
Yeah.
had people in my company that weren't doing that, and they left the company.
Yeah.
And I'll kind of
So
leave it at
fair.
that.
Fair.
And
I didn't mean, I guess it wasn't a loaded question. I think I want to give one example as you continue your story. They're the owners of this is a co-work space. I'm actually in my backup studio right now, borrowing one of their flex rooms. He owns a sign shop, probably $6 million. and he had 20 years of SOPs. It's very traditional
Yep.
industry standards. Grommets have to go specific things. We used Fin AI's Intercom. Intercom's kind of a popular name. Dumped this whole knowledge base in there. All of a sudden, the chat in Fin was doing what any employee that had been there for 12 years could do knowledge-wise. Doesn't mean
Amazing.
they could put the grommets in the. So my point in that is no business owner is being responsible if they ignore that. So I'm not on this stance of like, don't swap things with AI. I think what you first described, the ops guy in me was like, oh, Benioff at Salesforce just announced their headless. You don't need to use their application. You can build whatever application you want. There are two founders of a service industry, about 24 million a year right now. I've loved watching them rebuild all their processes in Lovable, which is like a system like Replit, essentially just creating whatever they want. I don't know, though, that like, let's say OpenAI itself could ever get away from Salesforce.com or even go way downstream of that to $40 million.
Yeah.
I still think that the CRM lives. But that's just, I'm so happy to be proved wrong on all of this, and I think AI is going to blow all of our minds. So I'm saying all that to say I agree with you. You can't ignore AI. I also don't mean like, is the company worth less? Let's pivot that then to say, how do you maximize value as the company? And then what are you seeing it do to multiples as these companies are leaning into these AI solutions?
Boy, some great questions there once again. So how do you maximize value? And I'll talk from the point of view first of the company owner slash board, and then
Sure.
second as an individual, and then I'll talk about valuation. So as the CEO slash owner slash board, what we were just talking about, taking your standard operating procedures, decomposing your company and finding out where you should lean into something, where the machine is going to do it better, and then matching your people against whatever the stuff that humans need to be great at, and then retraining, reskilling them. The people that aren't kind of fit for purpose, they should go do something else. You should bring in people who are great at what you really needed to do. I was talking, it was funny, I was talking to a founder of an India-based company a couple days ago, and he's like, yeah, we got 40 people in development. We're kind of AI oriented. We've got a very small go-to-market team. We've been around for 5 years. I said, you've got probably 22 people too many in development, and you need to, unfortunately, get rid of those people, get go-to-market people, because the leverage you get out of AI tools for development, your CTO needs to kind of wake up and smell the coffee. And so,
For sure.
that, and for anybody, if you're kind of mid-level, if you're director, manager, whatever, this conversation is definitely going on at the CEO and the board level.
Aaron, I'm so happy you said that, and I hate to cut you off because I want you to finish this, but there's a lot of talk like, oh, AI is going to take all the jobs. Here's the problem, and this actually applies to me. Middle career, mid six figures. If you're not cheap right now, or if you're doing something that's a repeatable process, you're toast. If you're flying under the radar and you're some expensive W-2 guy like me, not needed at the company. I can put some young, high aptitude, great attitude person on a cloud instance, cloud code, especially with the 4.6, but even Gemini, and you are the most at risk. And I actually don't think that's a bad thing. I think there's a lot of bloat in salaries right now, and people will hate on me, but you got to understand that that's my salary too. You got to get with the program. You got to find a way to make yourself cheaper or more productive, and for dang sure, don't be repeatable because you're smoked. If you're in the middle, you're going to be gone very quickly. Okay, sorry for that tirade, but yeah, I love that you said that. If you're director level, look out. Be groundbreaking or the writing's on the wall.
No, that's exactly right, Chad. That's actually a good segue into my second point, which is what do you as an individual do? Like right now, you should just be using all these tools. Even if it feels like you're wasting your time, you may feel like, gee, I'm taking away time from my kids. I should be working out. I should be doing this or that. But spend those evenings or weekends and figure out what best in class is in terms of using AI in your industry. Adopt that stuff and then tell other people how you're doing it. And because you're either going to be a leader or you're going to be left behind. And I've seen that.
Let me give someone an example on that. I do this at a scale of 40 million to 700 million. I have seen hundreds of thousands of records in these CRMs. However, again, one of the owners here does about $1 million in revenue of commercial real estate. He runs a personal little CRM. And I said, listen, dude, if you got some money to put in this, let's go get that separate machine. Let's figure out OpenClaw. Let's start automating a CRM for you.
Yep.
My goal now is let's set up a process where it's going to handle all your stuff, and then it just three-way text you when you're going to have a live meeting with the buyer of that 5 acres down in the next county or parish, And you can lean into those small projects that you think you're not getting paid for or you think aren't worthwhile. But then when you're talking to that CFO like I talked to at the $120 million company, and I can tell her, okay, great, you're stuck with 2 CRMs. Let's automate one of them. And so a lot of options. I appreciate you saying that. You just got to start leaning in and find little things to start doing now with it.
Well, Chad, I think one of the great things about the example you just gave, especially that commercial real estate owner being able to address projects they might not otherwise have been able to do, just based on kind of bandwidth, is you get more done. And so when that happens, when there's more productivity, that's going to be more jobs and people who are kind of on the front line of this wave. That's just going to be more stuff for us all to do.
Very optimistic, yeah. And also in maybe quality of life, he actually pushed back. He's like, I just feel like if I had less things on my calendar, I would fill it with more busy work. I'm like, no, man, you would talk to more qualified applicants at coffee shops and spend longer in masterminds with them. It's like do the things that are making you money, which for him is like being in front of high value owners around here in the parish so that he can sell commercial real estate or close deals on that. So anyway, I digress. Okay.
No, and back to the third point you asked, what's that doing for valuation? A couple interesting data points. So I've been on the phone recently with the likes of IBM, Salesforce, other really big companies. In the past, they'd say, we only want to buy software companies doing at least 50 million in revenue because we're already so big. To move the needle for us and advance our pipeline, you've got to be at least a certain size. And now their position is, gee, if you're AI anything, we'll take a look. And in some cases, they're paying not the fair value today, but the fair value a year, 2 years out, because they want to kind of buy the opportunity to grow and then accelerate their own development in a way that they haven't been able to do.
Did you read the headlines on SpaceX, Elon Musk buying Cursor? Was it Cursor or the other? I mean, the staggering amount that he was locked into a $10 million. Something $1 million option. Let's just make it factual. Did you hear the headline, or am I just saying this the first time? SpaceX buys Cursor. $60 billion was the purchase price, but what really was staggering to me is that they had a walk-away option, $10 billion. Okay. So $10 billion option. So if they chose not to close on the deal, they still gave Cursor $10 billion, and I think they're going to go through with the deal for $60 billion. Really outstanding, the valuations coming out of this. Okay, but that's interesting to me that you said Salesforce is willing to buy just anyone, because historically, it seemed to me like their go-to-market strategy was buy like the worst and cheapest $50 million company they could find and like make us all use it.
Well, to be fair, yeah. I mean, a lot of that's an industry that's been around for a while. So oftentimes, the companies that are left to acquire, they may have been filling in some niche that may not have been as sexy as you'd like. But these days, it's AI all the time in San Francisco. That's for sure.
Are they buying then? Are you familiar with Benioff's headless announcement that he made?
Yeah. I mean, they've had a big cloud platform for a long time, and Agentforce, which is their agentic platform, has been a big push and kind of making their whole solution open as an MCP available service. It's kind of a no-brainer to let anybody who's vibe coding on any basis kind of do whatever they want. So it's a smart strategy.
But you know what that is? Going back to the executives, that's another example to me. And in fact, I've never met Benioff, and he certainly doesn't need my advice, but I was very impressed because some people go at these waves or changes in market. They try to resist them. They try to strong arm them. I still am surprised when I see it's like counter selling into AI. Like, we're still the human touch. Like, you're losing money. But anyway, for Benioff to say, it would be smarter for us to empower all of these owners to build whatever they want, and then continue using us as the core technology, the database, so to speak. That's genius. You've made yourself sticky in the next wave. So now you have, instead of 3 key players in the CRM space, you have 1 billion different applications built by every CXO at every company, and they're all using Salesforce. And Salesforce just lived into the next generation. That was clever. I think that they were onto something there.
Yep, absolutely.
Okay, so AI helps valuation, and you're using AI to go to market more aggressively. Do you have more thoughts on AI? Because I do want to make sure that that the audience that's interested in exits, that they really get maximum feedback from you about how to maximize their own multiples.
Yeah, well, let's hit that. Maybe we can kind of tie up on AI and then go to some other points there.
Sure.
But if you are a CXO, if you're a business owner, if you're a director and able to influence the strategy of your business, you should 100% be thinking and start off by asking Claude, ChatGPT, whoever, how can I disrupt my industry? How can I disrupt my own business and restructure it, refactor it using AI? So that's just step one, and that's table stakes right now, and that's going to be different for each person. You mentioned the example of your friend, the commercial real estate owner, using some really innovative projects, but this holds true at any level. And I'll use kind of a revenue ops person as an example. I've got a very good friend who's a CRO at a multi-billion-dollar private company, kind of software and digital media company, and he has some forward deployed marketing engineers now who are going to be kind of hybrid marketers and Claude engineers.
That's smart.
If you're a mid-level person, that's a great role to taking on that kind of responsibility in addition to traditional revenue ops or even quota responsibility, but making sure you're on top of that and able to kind of be fit for the future.
I don't think RevOps goes away just for that reason. If you only think of RevOps as repeatable admin situations, then yeah, it goes away. But I'm actually very excited for the future of revenue operations. I think it's always been a fascinating career to be in. But it's always, in my opinion, it was always existed to bridge the business with the tech speak. And now I think they're needed more than ever, really.
It's just more important than ever. I think RevOps doubles in impact now.
Yeah. Yeah, 100%. Okay, so that was so be relevant, lean into it now. Anything else on AI?
No, I think that's it.
Okay, so the CEO of this $24 million service company, she flew us all out to Panama, the country, for their sales kickoff. Very generous. But one thing I appreciated that she said the quiet part out loud. She said, I get calls of people that want to buy the company, and I don't necessarily want to sell yet, but I always entertain those calls, which is smart. She's trying to feel out the market. So she's not the best ICP, or she's not the best company profile, in my opinion, for selling. I think it's a little harder on these service industries. But I assume, or I would hope, that the CXOs at these SaaS companies are thinking about that. I don't think that they've got to be in their 50s now. I don't think that they want to work another 20 years hitting these industry events. Some of these guys have flown us out to Dublin, Ireland, and dropped thousands of dollars on expense accounts at bars. Like, I'm sure that was fun at some point of life, but everyone wants an exit. How can they maximize an exit? And also, is there another side of that too, where you say, and here's like a quality of life aspect to it? I don't know if that makes sense, but like, is there some amount of, it's not just about going from a 4x multiple to a 10x. Here's some other things that you might not think about. How do they set themselves up for the most success for a really sweet exit?
Yeah, that's a great question. And the short story is, you may sacrifice quality of life for a 3-year period to try to get a great outcome. Oftentimes, the key determinants of a great exit are going to be your revenue growth rate over the last couple of years. Once again, having at least some profitability or being kind of break-even-ish, and then showing that you're really crushing it in whatever your company's unique selling proposition is. If you're an enterprise-focused company, that usually means having your customer sizes get bigger, moving into new verticals. If you're an SMB focused company with more of a PLG or a product led growth motion, it means just showing continued growth and not topping out as you hit and fully penetrate, one segment of the market. And I'd say for all of your viewers and listeners, if you're on a rocket ship and you have a good options plan, it may be worth killing it, and maybe killing your own brain, killing yourself for 2 or 3 years to try to get to a great outcome, because it's usually in a case like that where your options are really going to be worth something. If you're at a company that's
Yeah.
doing fine and just kind of steady Eddie, you're probably not going to see a
Yeah.
big equity bump, and so it's probably not worth working 70 hours a week. But you gave the example of Rubric. Unfortunately, these days it's like 1% to 5% of companies do something really exciting like that. But if you're at one of those
Yeah.
companies, it may be like a moment in your life where you really can create value for yourself, and you should definitely lean into that moment and make it happen, and not let that opportunity pass.
Yeah, that's so good. All right, Aaron, tell everyone where they can find you. Who do you think is most appropriate for them to reach out, how to reach out, what kind of deals you love doing, what you'd maybe like to, as an outcome from any company that's in your sweet spot if they were to hear this?
Fantastic. So my brand promise is we engineer 8 and 9-figure outcomes for boards, CEOs, and business owners. You can find me on LinkedIn. I'm one of the most connected people, for good or bad. I'll probably respond within 24, certainly 36 hours. We've got a website, www.comcapllc.com, but LinkedIn is the fastest way to get me. And I'm happy to give you a quick read on your situation. If you're a senior executive and you want to send me a note, I'll kind of tell you, I'll give you my 2 cents on whether I think you should stay with the company, try to get that outcome, or maybe consider greener pastures and go work for an AI business.
So the future's in the AI businesses. Is that right?
Well, like 20 years ago now, there was kind of a joke where all companies were calling themselves mobile first, and now everybody's calling themselves AI
That's
first.
true.
Everybody knows how to use a mobile
Yeah.
phone now, and in 2 years, everybody knows how to use
Yeah.
AI. Nobody's going to talk about whether you're AI or non-AI. It's just going to be
100%.
part of the ecosystem.
Cloud
So,
company,
yeah,
SaaS
exactly.
company. Yeah. Yeah. Thank you so much, Aaron. If you made it this far in the episode and you like this episode, I want you to like and subscribe for me. I will see you in the next one. Aaron,
Thank you,
hang out
Chad.
1 minute with me. Hang out 1 second, Aaron.